Hello, this is Eric Parnell, Chief Market Strategist of Great Value Advisor Group. Well, the first quarter of 2025 is in the books, and it was a tough first 3 months to start the year. And there's so much news flow that's floating around on a day-to-day basis, it's hard for investors to get a sense of what's up and what's down in the markets, the economy, and the world right now. At times like these, I like to go back to a basic principle that I used to tell my students when I was a college professor for so many years. Always do your own homework. Now, that statement has nothing to do with them actually doing their homework. It has to do more about gathering information. It is so easy when there is news floating around on a day-to-day basis to try to assume that what you're hearing is actually real. But once you actually look into the evidence and get the real facts, that's where the truth lies. And that truth is so important when setting the course in your investment strategy. There's so much concern right now in terms of the uncertainty associated with tariffs and some of the things that are taking place in terms of fiscal policy right now. And people are talking about the potential for an economic recession. Well, let's begin by taking a look at the Atlanta Fed GDP Now Forecast. This is something that all of us can find for free on the internet. We've seen a notable drop in the forecast for first quarter earnings, according to the Atlanta Fed. But it should be noted that this needs to be taken with a grain of salt. By the Atlanta Fed's own admission, there's an adjustment that needs to be made to this data simply dealing with gold. And the forecast looks a lot better than what their initial data might suggest. Now, the Atlanta Fed's not the only place that's putting out a free GDP forecast. We can also take a look at the New York Fed Nowcast, which is another GDP forecast from one of the 12 regional Fed banks. Here we see a much better economic forecast, not only for the current quarter at north of 2%, but also for the second quarter of 2025, also showing strong economic growth for the first half of 2025. Will this actually take place? It only remains to be seen, but what we're seeing is that the hard data is telling us a much better story than some of the things that we may be hearing in the financial media. Let's take a second step and look at corporate earnings. Corporate earnings are the lifeblood of stock prices. They are the force more than anything else that will cause stock prices to go up. There's a lot of concerns that because of the uncertainty associated with fiscal policy right now, that corporations are going to retrench, and we could see a shrinkage in corporate earnings growth as well as corporate profit margins. So what are we seeing right now? Current forecasts for corporate earnings through the remainder of 2025, as of the end of March, still show double-digit earnings growth for the remainder of the year. And this is in contrast to high single-digit growth in 2024 when the S&P was up strongly. The bottom line takeaway here is that despite the uncertainty, corporations are still showing confidence that 2025 will be a good year. Let's continue forward with some other important indicators. What about inflation? Just this last week, we had a hot inflation number that caused the market to turn to the downside. But when we take a look at forecasts about inflation based off of what the market is pricing in, we still see inflation pressures very much under control, with an expected average inflation rate of the next 5 years well less of 3%. These are just a few of the many examples of the hard economic and financial data that you can find for free in doing your own homework and getting a better understanding of what's actually going on in the markets underneath all of the noise that you can be hearing on a day-to-day basis. There are going to be periods when the market is doing fantastically well and we want to participate. But there's also going to be periods where the markets are climbing the proverbial wall of worry and we see the market correcting. Stick to your long-term investment strategy. A properly constructed asset allocation portfolio is designed to participate when things are going well and also to hold up during periods of market turbulence like we're experiencing right now. Thanks for joining me for this latest market insight, and I look forward to seeing you again soon.